Hello, good morning. I hope you can hear us. We are starting today with the green game, winning with sustainable financial strategies. And I'd just like to thank the government of Portugal for hosting us and for hosting this event. And of course to our Portuguese ambassador here in Azerbaijan. And without further ado, I will give the floor to Rose Easton from Principles for Responsible Investment. Thank you.
Okay, good morning. So my name is Rose Easton and I'm Chief Responsible Investment Ecosystems Officer at the Principles for Responsible Investment. Thank you all, and thank you Global Compact for the opportunity to address you all this morning in the Portuguese Pavilion. We're going to cover a couple of areas. One is One is the role of the PRI in advancing sustainable finance, and one is the impact that we have on climate action. Okay, so for those of you who are not familiar with us, the Principles for Responsible Investment is a leading organization in advancing responsible investment globally. We were set up by the United Nations, the then Secretary General Kofi Annan, back in 2006, with a small group of very committed asset owners and investment managers. Being the world's largest network for responsible investment, PRI signatories can learn from each other, they can draw from collective expertise and get a head start when trying to integrate ESG investing into their portfolios. Time is not on our side, so collaboration is really critical. So as that slogan says, we go further when we travel together. So it's also important to describe what we're not as well as what we are. So, we are not prescriptive. We don't tell you what being a responsible investor is. We know that differs depending on your role and the role and the needs of your beneficiaries and your clients. We're not a standard setter, and we don't have any sort of exclusions list. So we don't tell signatories what to invest in and what not to invest in. And we certainly don't name and shame, and we don't rank signatories. We represent some 5,000 members made up of asset owners, investment managers, and service providers who collectively represent over $128 trillion of dollars under management. That is more than half of the world's institutional capital. You can see we have signatories based all over the world. We've got 321 signatories across Southern Europe, of which we've got 25 signatories from the Portuguese responsible investment ecosystem, and we'd very much welcome anyone else to join our community. So when investors become signatories to the PRI, they make a commitment to the 6 principles for responsible investment. And these include integrating ESG issues in their portfolios, about being an active owner, disclosure, promoting responsible investment, working together, and then reporting on what you do. And these principles provide a clearly defined set of guidelines that enable our signatories to commit to the same framework to really ensure that everyone is working to change the financial system. Investors join for a number of different reasons. It's making that public commitment to responsible investment. It's benefiting from the technical expertise on responsible investing that we can share across a whole different range of asset classes and across different sorts of ESG issues. We also help convene, as I say, collaborate, bring signatories together, and advance and measure progress in responsible investment through our reporting and assessment framework. So a little bit of context behind us and our role in advancing sustainable finance. As you know, the world is changing at an unprecedented pace. And in this time of change, we're faced with a choice. You can bury your heads in the sand and hope all these challenges will disappear, or you can act and be part of the solution. And it's really clear that investors have a very clear role to play. And working alongside you, will mean that we can really help advance responsible investment. So our mission is clear. In alignment with fiduciary duties, we must build a sustainable financial system that benefits investors, their clients and beneficiaries, and the wider society. So we've just launched our new 3-year strategy, and it was in response to this changing responsible investment landscape around us. And we focus on 4 key areas, which I will run through now. So the first is around driving signatory progression, and we do this in 4 different ways. So we offer guidance. We provide the tools, support and agility needed to navigate the complexities of responsible investment via different guides to policy setting, to due diligence questionnaires, and more in-depth asset class and issues-based content. We also have a really excellent industry-leading academy, which provides training courses. And as a signatory, you can take advantage of discounted prices for these courses. And we've just launched, for example, a new biodiversity course that is really, really excellent. It's all the latest information. We then have reporting. So our reporting and assessment framework allows you to showcase your commitment to accountability and transparency and demonstrate your responsible investment progress and practices through the assessment that we offer. And then linked to that is something new. This is called progression pathways. So we recognize that investors are different and they're all different stages of their responsible investment journey. So to better support our members, as I say, we're introducing these different pathways. So one will be around maybe integrating ESG into your investments. Another pathway may be doing that, but actually also wanting to address real drivers of sustainability-related factors, measuring, tracking emissions, for example, through to the final pathway that would be around taking real positive impact. So that's impact investing. Okay, so that's our first pillar, progression. The second pillar is around strengthening responsible investment across regional ecosystems. So, as I say, responsible investment is not a one-size-fits-all approach. It has to be contextual. It has to reflect the characteristics of each of the different regions. So, in the regions, we support our signatories to come together, to convene, to build communities of practice and strengthen those responsible investment ecosystems, particularly actually in markets where those systems aren't as strong. So in emerging markets, this becomes really, really important role that we can play. We also do regional webinars and industry events. We have a global PRI in-person conference. And next year, we're delighted to say we'll be in Brazil. We'll be there the week before COP, so please, we welcome all of you to join us. The third area that we help drive a sustainable financial system is through collaboration and amplifying impact of collaboration. It really is at the heart of our work, and we're committed to supporting and leading initiatives that bring signatories together to address systemic risk and maximize long-term value of assets. Now, whether that is through climate action, human rights, or sustainable labor practices, these collaborative efforts are really the cornerstone of what we do. And I'll come back to this slide and talk a bit more about that in a moment. And then the final area that we are focusing our strategy on is strengthening an enabling environment. So to achieve our goals, we have to operate within a policy environment that supports responsible investment. Investors cannot achieve a sustainable system alone. Policy really matters. And that's why we'll continue to engage with governments and other financial system actors to influence policy and regulatory frameworks. So, should any of you be interested in joining the PRI, please reach out to the desk here, to Diogo, who's arranged this very kindly from Global Compact, and he can share the presentation, or indeed our website will have lots of information on how you join. So, let's talk a little bit about now the impact that we can have on climate action. And it's some of the action that we are calling for in the system and how we support that. So we're at an inflection point on climate, and with every single passing year that we remained unaligned with a 1.5 degree outcome, the window that we have to address this closes just a little more. Worsening climate impacts are leading to uncertainty and volatility in capital markets and the financial system, posing systemic risk for investors and their core businesses and threatening the long-term functioning of society. But investors have begun steps to protect themselves against this backdrop, and industry has made really great progress in systemically embedding climate risk into the way it works. We've seen strong commitments undertaken to mitigate this risk, backed by an increasingly comprehensive operational response, which has begun to emerge as the industry's standard. But much of this activity has begun to manifest through collaborative engagement activity, such as the investment initiatives I highlighted before. So I'm just going to take you back to the initiatives page. Here we go. So let's talk about one of them. You can see Climate Action 100 Plus. Now this is an investor-led initiative to ensure the world's largest corporate greenhouse gas emitters take appropriate action on climate change in order to mitigate financial risk and maximize long-term value of assets. It was launched back in 2017. It has over 600 investor signatories with more than 50 trillion of assets under management, and they engage with 170 companies across 30 markets around the world. And it exists to support investors in managing the risks engendered by our shifting climate in line with their fiduciary duty. And this initiative remains very well supported. However, we know our industry needs to go further, and commitments must translate into action. We know that the environment that signatories operate in must be conducive to their net zero targets and the wider operational integration of climate issues into their investment approach. And as such, the PRI is advocating directly for the evolution of an enabling policy environment that facilitates investor action on these issues, that fourth strategic focus area I talked about earlier. And with the next round of NDC submissions due in February 25, policymakers face a decisive moment in which they can reduce systemic risk by committing to and implementing national policy in line with 1.5 pathways. So let's take a different one of our initiatives. We have a climate action initiative which is a UN-convened and PRI-supported Net Zero Asset Owner Alliance. Now here we have a group of 84 institutional investors with $9.5 trillion of assets committed to transitioning their portfolios to net zero greenhouse gas emissions by 2050. And that's again in line with their fiduciary duties to manage material, financial and investment risks. And these members call on governments to act decisively and with urgency to manage down the systemic risk by committing to a number of different measures, implementing national policy reforms consistent with 1.5 carbon budgets and development pathways. Now, as we know, the issue of climate has become increasingly and unduly politicized in some markets. But climate change, it doesn't care about politics. Action is still needed, and it's vital that investors stay their course. So if you're an investor sitting here, taking action is consistent with your fiduciary duty, and if you're a company, it's just good business. The PRI will continue to encourage and facilitate investor action on climate, as described by our 3-year strategy. And our success in this regard should be judged over the long term. Just in the last 10 years, we've really seen a fundamental shift in how investors are embedded climate issues into their activity. The PRI acts at the nexus of climate, investment, and policy issues. And we, using our standing in the community to really push for more impact and action on all fronts. So to continue our work effectively and mitigate political pushback, our arguments need to be objective and they need to help governments navigate their domestic political environments. And as such, we need to underline the objective benefits to governments' action on climate at an economic and social level. So as we said at the beginning, collaboration is a key pillar of our ongoing strategic approach, and therefore we look forward to collaborating with all of you in achieving this mission. So in closing, I'd just like to reiterate that the work we do together is more important than ever before. The challenges we face are significant, but so too is our capacity to overcome them. So by staying united, by maintaining our optimism and continuing to push boundaries of what responsible investment can achieve, we can create a future that is not only sustainable, but also just and equitable for all. So it's together that we can make a difference, today, tomorrow, and for the generations to come. Thank you.
We'll now transition to a panel discussion featuring distinguished companies from the financial sector who will share insights on investing green financial products and fostering an ecosystem that promotes sustainability in finance. Please join me in welcoming our panelists. João Dias Mestre, Head of Sustainability at Fidelidade. Paula Viegas, Chief Sustainability Officer at Banco Montepio. Denise Pinheiro, Head of Sustainability at Banco Fomento de Angola. And Nabil Kadri, Superintendent at BNDES Brazil. Moderating this panel is Bárbara Silva, a journalist from Jornal Negócios.
Hello, good morning to you all and welcome to the Portuguese Pavilion here at COP29. Thank you so much. Just going to turn to see you to see you all better. And let me start by asking you, and maybe we can do the same questions for all, and then go to more specific questions. But my first question for you is, what do you think that the financial sector can do to accelerate the transition to an economy that is lower on carbon emissions? And I'm going to start here from my left side and go all the way.
I would say that as we heard like previously and been hearing for the last year, sustainability is not a one-size-fits-all. Mm-hmm. And Angola is in a different moment, or a different position than probably the Portuguese entities. We still don't have taxonomy in the country, and the central bank and the regulators, the financial regulators, didn't really impose or create any type of regulation as to the point. But there's a lot of things that we still can do. And in Angola especially, that more than 70% of the gross is coming from the oil sector. We depend a lot on carbon emissions from the oil sector, a lot on diesel fuel and it's not the cleanest, I would say, type of energy production. But still, we have a lot of things that we can do to actually mitigate. We can look into the social, look into ESG, we can look into the social, what we can do to improve. And even inside the institution, how can we promote a cleaner production of services? How can we promote ways of simple, greener ways to do business inside the institutions before we move forward imposing or creating other financial solutions to a country that is not ready to move to that position yet.
And just a question following, because I think that we can do that and create a more dynamic debate. Do you think that it's important in these events, in these conferences, for a perspective of a country like Angola that is not quite there yet, or it hasn't done the path because it has an oil sector that is very big and very important to the economy of the country. Let's not forget that.
I believe that everybody counts on this matter, and when we talk about sustainability, the position for every organization or every country, independently of which position they occupy on this sector, is really valued. And a lot of things, for instance, if you talk about like the carbon emissions, we probably do a lot because of the oil production, but probably we're not the worst comparing to other nations in the country. Probably the solution can come from us. We can come with better solutions or probably the more creative solutions to a problem that wasn't caused totally by us.
Okay, I'll get to you later. Moving on, the same question. Financial sector, what can contribute to this transition to a more
creative solutions to a problem that wasn't caused totally by us.
Okay, I'll get to you later. Moving on, the same question. Financial sector, what can contribute to this transition to a more
creative solutions to a problem that wasn't caused totally by us.
Okay, I'll get to you later. Moving on, the same question. Financial sector, what can contribute to this transition to a more
creative solutions to a problem that wasn't caused totally by us.
Okay, I'll get to you later. Moving on, the same question. Financial sector, what can contribute to this transition to a more
creative solutions to a problem that wasn't caused totally by us.
Okay, I'll get to you later. Moving on, the same question. Financial sector, what can contribute to this transition to a more
creative solutions to a problem that wasn't caused totally by us.
Okay.
Designing the loan policies. So that's why during all these decades we were part of many of the big decisions on climate finance in Brazil. For example, when Brazil created the Amazon Fund. The Amazon Fund is the biggest forest fund in the world today,
Yes.
with donations from Norway, from Germany, from US, UK. So by that time we were part of the discussions, we helped the minister to create it, and now it's a very big national fund to develop the Amazon region. The National Climate Fund, for example, we receive the revenues from oil because Brazil produces a lot of
Yes,
oil
of course.
too. But in 2009, during the Copenhagen COP, Brazil created this National Climate Fund that receives some parcel of the profits from the oil to finance in low taxes, very low taxes, the transition to a green economy. So we have, for example, interest rates of 1% a year for forest and bioeconomy, for example. So it's a very, very low interest rate. So we have a very important role in the discussions of sustainability, and we try to help the financial system in Brazil to incorporate all these innovative products and processes. As you said, it's very important to the central bank to have an important role.
Yes.
So just to give two examples. In Brazil, we had a national policy on environment since the 90s, and that policy, the law, says that banks in general in Brazil have a co-responsibility under the climate and environment risks of the project. This is the first thing from the 90s. And the second one is the central bank as the very important player there. So thanks.
Thank you so much. It's quite an important view, and I'll also get back to you, because I think that these are important views from the maybe more the public financing and the public funds. Now going to the private sector, so we have this division, but it's not it's not important. So from a commercial bank, and here we are saying that different approaches from a Portuguese commercial bank, Montepio. What is the vision of this role that the financial sector can do really to change the economy, and to channelize funds and money to these projects?
Hello, good morning to you all. I'm so pleased to be here, very honored to representing Bank Montepio at COP29, and I appreciate the invitation. So, answering to you, the financial sector for me.
Sorry, can you put just the microphone a little
Oh,
bit? It's because we
you
are
don't
not
hear very well.
Yes.
Okay.
Thank
Sorry about that. The financial sector, and as a commercial bank speaking as well. So, answering to you, the financial sector for me.
Sorry, can you put just the microphone a little
Oh,
bit? It's because we
you
are
don't
not
hear very well.
Yes.
Okay.
Thank
Sorry
you.
about that. The financial sector, and as a commercial bank speaking as well. So, answering to you, the financial sector for me.
Sorry, can you put just the microphone a little bit? It's because we
you
are
don't
not
hear very well.
Yes.
Okay.
Thank
Sorry
you.
about that. The financial sector, and as a commercial bank speaking as well. So, answering to you, the financial sector for me.
Sorry, can you put just the microphone a little bit? It's because we
you
are
don't
not
hear very well.
Yes.
Okay.
Thank
Sorry
you.
about that. The financial sector, and as a commercial bank speaking. Also, we need to finance innovation, because this is going to create new jobs also, and to invest in innovation in a very different scale, because we are talking about the brown sectors, brown industries. And furthermore, we have the regulatory agenda going to create new jobs also, and to invest in innovation in a very different scale, because we are talking about the brown sectors, brown industries. And furthermore, we have the regulatory agenda going to create new jobs also, and to invest in innovation in a very different scale, because we are talking about the brown sectors, brown industries. And furthermore, we have the regulatory agenda going to create new jobs also, and to invest in innovation in a very different scale, because we are talking about the brown sectors, brown industries. And furthermore, we have the regulatory agenda going to create new jobs also, and to invest in innovation in a very different scale, because we are talking about the brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different scale, because we are talking about brown sectors, brown industries. And furthermore, we have the regulatory agenda to create new jobs also and to invest in innovation in a very different.
So we are faced with wildfires in Portugal, typhoons in Asia, Latin America, So we are
to grow industry. And furthermore, we have a program to create new jobs also and to invest
frequent and severe. The other thing is Asia,
because we are talking
Latin America.
to
So we are
grow industry. And furthermore, we have
topics such as biodiversity or social, because we need to change behaviors of the population, and we need to engage not only the companies but also individuals. So how can we as individual and the society as a whole, how should we adapt? Should we continue to build near the sea, since we know that the sea will rise? Should we continue to build next to a forest that every 10 or 20 years will probably be burned? So these are the type of discussions that we want to engage. And the risk part, we need to make sure that we have products that answer to, and I will end with this topic of protection gap. In Europe, 5 to 20% of the costs, only 5 to 20% of the costs are covered by the insurance. So every time there's a climate event, only 5 to 20% of the costs of that event are covered from insurance, and Portugal is one of the lowest in Europe in terms of coverages. So we need to increase the capacity of coverage from population, but they need to understand the risks, because people are used to think, oh, this will happen in Spain, not in Lisbon, but then it occurs in Lisbon again. And we need to be prepared for these events, and the insurance is crucial to make the society more resilient, so that we don't want to bring FMI again, because we need to have more money to pay for all the costs that are underlying this type of event.
Okay, thank you. Coming back also. We go this way, but we can do it. Also, at the same time that we are facing a more challenging in terms where to put the money, because investment cannot be or continue to be in the sector that was in the past. Now you have to, all of you have to see where you are putting your money and to see if it really is projects that are contributing. But also we face a geopolitical crisis all over. We had an energy crisis in Europe. We had geopolitical problems in Europe. Also, Africa and Latin America has its own crisis and geopolitical problems. And also the cost of money, the cost of capital is rising. So how does this geopolitical crisis and the inflation rates and the cost of money being higher then matches with the necessity of investing in green projects? Does it make it more difficult to do something that is already difficult per nature?
What we believe as Banco de Fomento Angola is that there is no such thing as ESG separate. Okay. We have a ESG and is an acronyms that comes together. And especially talking about Africa and the region where we are not able to talk about environmental if you don't talk about the communities, if you don't talk about the social. Yes, we need to invest in other areas, but we need to have people that can come back, because we are a bank and we need to get our money back, between brackets. So we need to have people prepared to usufruir or to benefit from these investments and actually to buy this money that we are selling. So it's important as a financial institution to look into the communities and look to the social side of the ESG in order to be able to have all the other, in order to have a good governance, we need to have a good social side that is strong enough. And especially talking about in developing countries like Angola, we coming from a 30-year war. We are rebuilding the country. We have a lot of social issues. And with the war, it came a lot of environmental issues as well. So it's not possible to invest in the environment if you don't invest prior into the communities and to the people.
And can you give examples of projects that flagship projects that you have in the country for from the Banco do Fomento point of view?
You're talking about social projects.
Social, environmental.
Yeah, we are investing on the mangroves.
Okay.
In the region of Luanda, around Luanda, that is a huge problem as well. We have a big investment on mangroves. Socially, we have a very mature corporate social responsibility program that comes from 2005. There was a decision on our board that actually 5% of all of our revenue would go to a social investment fund. And that fund has been growing, and at this point we stopped contributing in 2009, but we still have around $60 million in the fund that is being used in different areas, but investing in children, on social inclusion, health, and education. We support a lot of gender equality, especially in schools, because Angola has the biggest, I would say, school evasion in the region. And the number doubles when we talk about girls. So investing in education, we actually focus a lot on gender equality in the schools. We built schools in the remote areas and areas affected by the drought in the south of the country. That is environmental problems in there, that actually investing in water, access to clean water and sanitation. So it's a huge program. I would say that we have about $5 million invested every year. That is being going on, I would say, like with the current structure since 2017.
Thank you. I'm just going to make you one last question, because I think that we are in COP first day that is dedicated to financing today, so all about financing, and we have heard world leaders talking about it, and especially the leaders from developing countries saying that the developed countries need to contribute more, need to put their money on the table. So from Angola's point of view, and given that you are not on a political level but on the field investing and seeing the population and the projects, what's your view on this? Does it feel like countries like Angola and other ones that are smaller and even poorer are begging for this financing, or should it be more equal?
Being equal is probably being unfair. Okay, I cannot ask United Nations or the United States to contribute the same amount of money as Angola would contribute, or China, for instance. I would say that equity is better than equality.
Okay.
I would say that we should contribute on the percentage we actually put into the problem. That's the thing. Africa actually didn't cause the biggest issue on the environmental, but is being asked to contribute the same as other continents. My personal opinion is quite passionate about that, and then I'm representing an institution, so I really need to be more cautious in that. But I believe that all the countries have to contribute, but we cannot expect to be the same.
Thank you so much. Moving on to Brazil, and going back to the original question that was if the geopolitical crisis makes it harder. We are talking about countries with very, very different dimensions, very different problems in different continents. We all share the same language, but so from a Brazilian point of view, what is this difficulty with money being more expensive and putting into the right places?
Now it's working. First of all, I totally agree with your point of view when we talk about interest rates and how to allocate the resources into the agendas. So once we put people in the center of the decision, it's easier to make the decision to where to allocate the lowest interest rate resources and where to allocate the resources that are costly, I can say. We did something very interesting in 2016, for example. We looked for all our product portfolio and we selected the sectors that had the higher externalities on social and environment, positive ones, and we put it in a category saying this would receive the lowest interest rate in the whole bank. Then we categorized it in five different divisions, the sectors, and then we allocated the interest rate, differentiating it. So this is one thing that all financial institutions can do, and it's easy.
Okay.
But you need to plan. You need to plan. You need to have a strategic view on where do you want to achieve or where do you want to arrive doing this. And then, as Banco Fomento Angola said, another thing that is very easy to do, again, because in Brazil the finance sector, the public and the private one, are very profitable, very, very profitable. Just to have an example, for example, one big bank in Brazil in the first trimester of this year had a profit of $5 billion only on profits in the first trimester. So it's a huge market with huge profit. So one thing that we do in our institution is every year we segregate $100 million to make a social fund for non-refundable investments to have enabling conditions of communities for biodiverse restoration, for social inclusion, and to make the linkage between our work and the public policies on culture, innovation. So we have this kind of fund. Every year we segregate, as I said, around $100 million to make this fund. So there are two practical things that financial institution can do, development or private or even, can do to make the difference in this.
Sorry, I'm having really big difficulty in hearing you. It's all me or you?
No, I'm hearing.
Oh, sorry. So
yeah.
it's just me. Sorry. So you were saying?
Yes, it's
yes.
two practical experiences that we did that can show that it's possible to make difference doing things that are related to our own business, I can say, and do the difference in the ground.
Okay. And do you think that with the bigger money and deeper pockets, since that bank had a 5 billion profit, do you think that with more money comes more responsibility into then putting the money in the right places, not only for the private sector but also for the bank that you represent? Because you said that you had like a big budget, more than World Bank even.
Yes, we had a very, as I said, a very big link between our work and the public policies. Brazil is a huge country, but with huge challenges related to inequality, mainly inequality. And as I can say, the gender inequality, poverty, regional inequalities. So we had this kind of view. All the investments that we do, all the projects that we support, we try to internalize decisions that can help diminishing this kind of inequalities or diminishing the poverty or having the big, and how to do it with big or small money. First of all, it's to have very clear what we do not support and have it clear and transparent. It's the exclusion list. So we do not support coal, we do not support energy generation with oil and so on and so forth. So have it very clear and transparent. And another thing is having a very good internal risk management or screening of the projects. Because even when we are talking about economic project in the ground, this economic project have a lot of interfaces with social in the surrounding of it. So how this project can be positive to the territory. So we do this kind of analysis, we dialogue with the entrepreneurs and try to make better the results, not only the economic ones, but the social and environment. So we can do it, having good management and risk structures inside the bank.
Okay, thank you so much. All this discussion is very passionate, and I have lost track of time, but we still go to the to our last two panelists. Also, within the same question of the cost of money and the responsibility, also between profits and good investments, what is the Montepio point of view?
You were talking also about the geopolitical
Yes,
challenges.
yes, of course.
Well, when we talk about geopolitical...
It's the perfect storm.
Yes,
geopolitical risks, cost of money.
Yeah, but you see, that's why we talk about sustainability and ESG, because you don't have climate and environment stepping aside of the other two. So it's about social and governance approaches. And when they fail, the other one fails as well. And they are all mixed and interdependent. So when you have all these crises, and Europe is in one of it, and the world is facing challenges as well, you have a huge impact in assessing resources and transportation and value chain, and especially supply chains are affected. And this means the prices rise, and you have a lower competitiveness, and then of course this together with the price of money, as they call, does not help. It's challenging, but there is an SDG that is very powerful, and it's about the 17th partnering for sustainable development. I think it's all about this. How we can manage well sensitiveness for people and communities, and responsibility to the environment. And then we need to cooperate and collaborate, even if we are peers in the same industry.
Okay.
But that's the way we see it, that's the way we act daily.
Okay, thank you so much. Going to Fidelidade, you were saying that apart from being an insurer, you were also an investor. So is it difficult to assess where you are going to put your money, given all of this that we are talking, the geopolitical risks and the cost of money? So from your company's point of view, how is this? How this can be done?
Well, I think we can always say that thinking about investments, it's thinking about the end of the world, worried about the end of the month. And in any company that has investments, I would say that to make sure that we take ESG dimensions in the investments activity, probably there are two challenges. The first one is to make sure that we have a concrete framework with relevant data, and that is, let's say, unquestionable. And we are not yet there, because most companies are not yet reporting, or if they are not following a concrete framework. In Europe, we will solve it hopefully in the next years, but it's still a challenge. When I talk with the investment division, they always say, okay, but which data? How do we interpret this data?
Of course.
So it's still a challenge. And then the profitability side. Being in an insurance company, I think we have a benefit. There is we, by essence, think long term. Because if we all think that the world needs to be net zero, or if we all think that the world should be more equal, obviously the investments that go aligned with the SDGs and the PRI principles naturally will be the investments, and in the future will be the profitable ones. The other ones will not be profitable. They will end probably. They will be stranded assets that will not be able to generate profit. So, thinking long term, then it's much easier to move the investments to assets that probably are the ones that are more aligned with ESG. But we have the data challenge and we have the timeline challenge, thinking long term versus short term.
Okay, thank you so much. We could be here talking for the rest of the morning, but sorry. Thank you for your patience and to hear the panel until the end. It was really very interesting, and thank you to our panelists. Sorry, and thank you all, and I wish you a good COP and good day of work. Thank you so much.
For this beautiful event. So thank you and hope you enjoy the rest of the day at COP.